Hi, this is Alfonso Cordero again, and today I want to talk to you a little bit about offering compromise. What is an offering compromise? Let me give you a little bit of a background. Let's say that you are a taxpayer and you made good money last year. It was a great year, you made good money, and you owe a lot of money to the government. Between that and some money that your wife made, your spouse, and you also owe more money there. But now it comes to reality, and unfortunately, you don't have the money to pay. Unfortunately, this keeps accumulating, and we give fast forward, and we are 5 years down the road. You owed at the beginning $10,000. Now with penalties and interest, you owe the government $50,000. We check your reality as of the day, as of today, based on your income, what do you have, what your expenses are, and there's no way you're going to be able to pay that debt to the government in the near future. So what the government said is, okay, I have a proposition here. We can come together to a table and talk about it, and let's see if you keep yourself current on the taxes and you don't accumulate any more debt from now on, I may be able to forgive some of this debt. It's a compromise that you make, you in one end and the government in the other end. And the idea for that is to take out a receivable that is not going to be collectible, an uncollectible accounts receivable. That's the whole idea. They are going to move that and convert that into cash and convert into a benefit to you, because instead of paying the $50,000, you may pay at the end $5,000 or maybe even $10,000, depends on how much you can pay. So the whole idea of that program is to pay pennies on the dollar. And the way it works is we have to fill out forms to the government to let them know that you cannot pay the debt, there's no way you're going to be able to pay that, or that you don't owe the money. That may be another alternative. They may be collecting money from you that you really don't owe. That if we look back, it was a theft of identity, or it was some other reason, but you really don't owe the money. So we need to make sure that you can comply with those, that you qualify in order to provide that service, in order to present that to the government. But it's an alternative that is out there, offered in compromise. And the whole purpose of it is that you pay to the government less than what you actually owe. And the idea is that you take that out of your shoulders, you come to an agreement, you give them X amount of dollars, and they cure a receivable. They have an account receivable that they know they're not going to be able to collect from you anyway. So they settle for that amount, and then you have to keep current for the rest of your life. That is you compromise. You need to make sure that you keep current for the rest of the next years to come. So the offering compromise is a valid alternative. It is out there, and it is legal, and it is true. You just have to make sure you do qualify for it. Some people are going to tell you you qualify. Just make sure you do qualify before you engage into anybody to help you out to do that paperwork, because it's not a very simple process. It's a very cumbersome, and it's also a very expensive process, but it's a very good process for you. And I know that because we have done more than 50 of those, and we have always won. And by won, I mean we have been successful. We have been able to pick and choose exactly who we said, yeah, we want you as a client for this, because we know you qualify. That's basic what it is. We are honest with it. If you qualify, we're in. If you don't qualify, we're out. We're not here for the money. We're here to help you and to make sure that at the end you get the product that you're looking for. So offering compromise is an alternative that the IRS give you, the Department of Treasury give you, so you can come to the table to them, talk to them, present your situation, and said, I cannot pay that much, this is what I can pay. And then they evaluate that, they have their own formula, and by doing that they are going to come back and say, well, you owe $50,000, you offered to pay $5,000, you know what, we cannot accept the $5,000, but we will take $5,500. And then you, of course, evaluate that and you say, sure, let's do it, because $500 is not a difference, and you're going to be saving yourself $44,000, $500 on that equation, on that particular example. So it's a very good alternative. Take advantage of it when it lasts, and just make sure you go to the proper professional to do it. I'll see you later.